Welcome to TheoTrade. This is Don Kaufman. It's October 24th, 2018. We're just moments after the cash close of the markets. Fear has literally gripped hold, specifically inside of the NASDAQ. At a portion of the trading session just moments ago, we were down almost 5% with Microsoft's earnings out after the bell. Let's get into it. Again, a wild day on the street today with the NASDAQ futures falling like a rock towards the cash close. Let me get into some of the specifics, and more importantly, let me get into the idea of here's really what to expect kind of next inside of a wildly volatile marketplace. First of all, the NASDAQ futures, that is not a misprint or a mistick of any kind. They're going to close down the trading session right around 4.3%. Now, we talked about this, okay, specifically and expressly the other day. It was on the weekend video, and on Monday, the video, I reiterated this very point. What did we reiterate? That the financials had already broken down. The only thing that was standing between us and slipping off into the oblivion was the monsters of technology. The monsters of tech, of course, being our Microsoft, Apple, Facebook, Google, Amazon kind of complex. Now, the monsters of tech finished down the day 5%. But before I get to that, I really want to get to the specifics of what occurred inside of the NASDAQ futures. A very, very rare occurrence, and it was absolutely wild. So, having spent about 15 years in the brokerage industry, there are some very little known rules that exist inside of futures. One of the rules inside of futures deals, okay, with margin. Now, margin in futures is held, okay, as what we term initial margin requirements. So the initial margin requirement inside of a NASDAQ future is $7,700. Now, this is like, you're like, okay, so we're talking about volatility in the marketplace and he's talking about margin. It's the margin that drove the volatility. Wait for it. So the initial margin is $7,700. Now, with that margin, if you lose more than $7,700, that's not the total loss you could take. You could technically lose more than that. That's the initial margin. And what they effectively do is, at the end of the day, then they hold another $7,700. But if we start to approach, okay, the limitations of intraday margin, and intraday margin would be $7,700 in this particular case, okay, that would be the limitation. Then they have to actually go grab more money out of people's account. Most, okay, trade right to the edge, and you'd have to have another full $7,700, okay, to grab from the account. Most don't necessarily have it, okay, or you may have positions on that are, for instance, 4 times that margin. There's also intraday margin that gives you 4 times the buying power. A little bit convoluted, but let me actually break it down for you. Each one NASDAQ future, each point that it moves makes or loses $20. So if you take 7,000, okay, 700, which is the overnight margin requirement, you divide it by 20. What do you ultimately come with? 385. So when the NASDAQ futures are going to approach very close to 385 points, all the risk managers at every major futures firm has to get ahead of it. And they have to actually look at the accounts and say, hey, can we actually continue? Otherwise, they have to whack out of the position. That is, if you're long a future, they got to sell you out of your position. All right. Then compound the idea. You're coming towards the cash close and we're about to hit the margin limitations, and you realize that Microsoft is about to have an earnings announcement. And if Microsoft misses earnings, the NASDAQ futures could be down another 100 points. And who's left holding the bag of risk? It's the brokerage firm. Okay? It's the futures firm. That'll blow them up. They'll be non-existent. Okay? Microsoft comes out. Earnings, okay, they got lucky at this point. The initial reaction was down, ultimately bounced back up. Things are wild. So what you effectively saw was a margin flush that was actually going on. Anybody that was close to either their intraday margin restrictions or their overnight margin restrictions, they flushed them. And when they flushed them, along with it went the entire market. We actually traded 68.80. Okay, down to basically 67.85. You lost 100 NASDAQ points in a matter of what? Less than 15 minutes inside of trade. Again, in a sheer panic to get out of the marketplace. The first time we've seen anything like that happen in literally years, almost a 5% decline. Now, everybody has that feeling of like, okay, this is clearly it. When it's the end of the bull market. And I would have to agree with that. It's the first time I've actually said that live on air or recorded like this. It's over. Okay, there is no more quote-unquote bullish marketplace effectively left. We are hitting now effective corrective territory. If you look at a year-to-date percentage, if you want to get really technical about this, we were up basically 9%. Now we're effectively down about 1%. That's specific to the spiders. Now, we can actually go into quite some detail over here. Nevertheless, I think you guys get it. We're going to be in a much more volatile situation. With that volatility, though, opportunities, they are arising everywhere. For those of you, if you tuned into, and let's talk about some opportunities before we talk about specifically what's next. If you tuned into the video on Monday, okay, it was a grapefruit, and the market rarely gives you grapefruits. We put a position on, okay, inside of Disney. We talked about it on, again, Monday. The position was there. In fact, it was priced better on Tuesday. Here's Wednesday inside of Disney. We didn't know anything, okay, about Disney. And I want to make that clear. I didn't sit here and think to myself like, wow, the technical level, okay? This is arbitrage 101. What arbitrage 101 basically means is, listen, if the market is going to take more heat, which is what we anticipated, they have to go after the products that have been unscathed. Disney was one of them, okay? Now we can go on, and we're going to find, okay, more examples of this in days to come. We're going to find more opportunities, both bullish and bearish, in days to come. But for right here, right now, some of the opportunities, I look at things like the IWM. This is the Russell. Pull it up on a year-to-date percentage. It's now down 5%, okay, after being up net about 13% on the year, okay. We are now entering, quote-unquote, near bear market territory. That's why I'm saying if you're questioning it's the end of the bull market, okay, listen, there is a major index product called the Russell, if you're unaware of it, that's actually not just in corrective territory, all right, it is effectively near bear market territory at this point in time. Now, this is a year-to-date percentage, again, being up near 13%, now down 5%. If we are to correct this and put it up for a 1 year period of time, over a 1 year period of time, it was up 16%, now down again about 2%. Again, that's over year, and that takes us within a 2% of a full bear market turf inside, of course, the Russell product. Now, why do I look at this? Now, the opportunity here, this is not about getting long or short, okay? It's not about getting long or short at this point in time, and I want to bring up a style and show it to you really quick. What do I see in this product that's starting to scream to me? Well, what's starting to scream to me here? It's implied volatility. It's just getting good. Realize the volatility right now is almost as high as what we termed the big volatility burst. But I'm going to caution you a little bit, okay? I am selling premium. Look at the volatility inside of the IWM. I'm selling premium. I am doing it out in duration. Okay, this is a duration trade. This is a trade that we, of course, emailed out to most a little bit earlier in the day. It's 63, 68, 30, 135, 130. It's out. I'm trying to make about half of that credit on the trade. The reason I'm bringing this up, this is not unload the boat. This is not sell to your heart's content yet. One thing I want to caution you, and one of the reasons I really wanted to spend time, when I say that fear kind of grips hold, one thing that was really bothering me about this market, and I got to get it off the chest, and that's this. Even though I see volatility taken off to the upside, clearly we're at the end of the bull market, okay? Panic ensues inside of the NASDAQ today. The VIX is laughing in our face. It's still nothing. What did we hit? We closed at a 25 VIX? Are you kidding me? We saw the Dow. Okay, the Dow, which actually was quite resilient, and the reason the Dow was so resilient is because Boeing was up. The Dow's down 600 points. The VIX is sitting at what? 25. It's laughing at us. Be careful the next few days in this trading. Okay, fear grips hold, but I'm telling you, I haven't looked at the marketplace and thought to myself, wow, this is getting out of control. And you got to see full-on shock and awe for any of this to be over, okay? Because right now, I'm telling you, we're just getting warmed up. A 25 VIX with the Dow down 600 on the day, the S&P is off by 3%, and the NASDAQ, okay, the NASDAQ goes nuts and is down almost 5%, and the VIX shrugs its shoulders and just keeps on coming. You got to be careful. Allocation needs to be consistent, needs to be small. We want to fire out a little bit of premium selling. There is no heroes made in the sale of premium. Okay? Nobody remembers anybody's name that's been selling premium. Hey, what did you do for a living? I sold premium for 25 years. Nobody cares. Like, it doesn't sound cool, but I'll tell you what, it doesn't have to, because it could be really profitable in a marketplace where the premiums are starting to get juicy again. This is a sell side market. We have now transitioned. Premium sellers, okay? Get out there. Start to allocate. Do not load the boat yet, okay? We've got a lot of products where, again, legs are now kicked out of the marketplace, like I mentioned on Monday, inside of the financials. But now we're starting to get interesting, okay? But at the same time, let's kind of temper some of the expectations. You realize you have Amazon, Google, Facebook, Apple. They still have to come out with earnings. Somebody's going to beat, somebody's going to miss. We're going to laugh, we're going to cry. But I want you to remember something, okay? Bring up the last 5 years in this monsters of tech. Now you're starting to see a little bit of a dent made in the marketplace. Call me crazy, though. We're just getting started with it. Again, after hours this evening, we have seen earnings from the likes of Microsoft. Again, doesn't matter whether they beat or not. Okay, the underlying has now rallied back, but really kind of tapered the expectations, I think, of a lot of technology. It's up maybe $3 on what was amounting to over a $6 expected move. Tesla, which has been known as the wild child of the entire marketplace, it is bid higher in the after hours. Again, way inside of a $34 expected move, however. On the table, okay, coming up, Amazon, Google, Facebook. The last thing, okay, the last thing that I want to leave you with is just this. I started off with kind of fear grips hold in the markets. What are you going to expect next? Obviously, we're going to see some more sell-offs. We're going to see some wicked rallies. Go with these gravity points that we have provided to you. They have been absolutely essential. And I've mentioned this, in the midst of volatility, all we effectively do is ping, okay, from level, okay, down to level. Here's the 2811. Here's where we were earlier this morning at what? 27.31. We took a shot, came right down to 26.82. Quite frankly, I think that tonight we'll probably rally up and sit in the overnight session 26.82. Last but not least, 26.26 down to the bottom of your screen. After that, things really, truly do get nutty. If you don't have these levels, again, we've been sharing them ad nauseum. Okay, take a look once again on an intraday basis. This is the trade from 27.31, which we skirted along all night long at 27.31, came right down to stopped on a dime at 26.82. We did progress lower in that panic in the NASDAQ. I would have anticipation of us kind of like reverberating and bouncing right back into that 26.82. Use the levels. Day-to-day predictability in heavy volatility is impossible. The best you can do at this point in time, sit back, take some positions, sell some premium, and let the premium roll in. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.